manager for Movement Mortgage. And she's going to tell us a little bit about how to get a loan with the least amount of money. So how does someone basically start, or where do they start the process, and what are their options?
So the best way to start is to do an application, and let's figure out with the income that you make and the credit that you have, what you qualify for. We're very lucky in Virginia, where we are blessed with a lot of options for first-time home buyers, including there's a Virginia Housing Department program that's called a bond program. It will go all the way to 100%. We'll actually even pick up some of the closing costs.
Oh, that's awesome.
So people can come in with no money. I think one of the obstacles for folks is they either think their credit's not good enough or that they're not in a position to buy a house. And I actually will argue if you can pay rent, you certainly we can probably get you into a house.
Oh, that's great. That's great. What other options does Movement offer?
Yeah, so VA loan is a great program. Not everybody obviously qualifies for it, but anybody that does, I would say that would be the number one way to go, would be to use your VA eligibility. You've earned it. We thank you for the service, and that's one way that we try to take care of our vets. Virginia Housing has several different programs within it that are for first-time home buyers, and we also have a conforming program that is not 100%, but it is for those folks that have a little bit of money, but not a lot of money, and it's designed for first-time home buyers with some income restrictions around it. So we are trying to get more people into homes and get them more people qualified.
Okay, so if it's not 100%, what is like 3%?
3% down, and then
Okay.
of course we 3% down is our is the conforming program, and of course there's always FHA. So FHA is designed for a couple things. It's certainly for first-time home buyers, also for people that don't have great credit.
Mm-hmm.
Or they make too much money to qualify for some of the income restrictive first-time home buyer programs.
Oh, okay. Well, there's a lot of options.
There's a lot of options.
Okay, so what does someone do? Because I know I have a lot of buyers that they just go online and they start checking for what is the lowest rate. But I hear that is not really the best way to go, right?
Right. Well, so I always kind of chuckle when somebody says, "What's the rate for today?" It's like asking me how much the car is. If I don't know what kind of car it is,
Yeah.
I can't really tell you what the rate is. So the
Yeah.
rate is not just a number. It's based on a lot of different factors, and score is definitely one of them. Whether it's a bond program or an FHA, whether you have mortgage insurance or not, there's a lot of factors that go into rate. The best way to get started really is to get an application, pull credit. I am a credit expert, so I love working with people early on that may be 3 to 6 months away from maybe purchasing, so that we have time to do any corrections or repairs to the credit so that we can get them in the best possible loan. Credit is a big deal, not just for qualifying for programs, but credit also affects your mortgage insurance. So anytime you lend over 80%, borrow over 80%, you are going to have mortgage insurance, and the higher we can get the score, the less that number is.
Oh, that's awesome. Great. So you guys, I'm just going to give you Johnny's information so you can contact her directly. Thank you so much for your time. I
Thanks for
appreciate
having
it.
me.